In a system that just ain't right, gonna tear it down, gonna start a fight. Anarchy and numbers is my game. I'm the investor with no shame. Greed and corruption, that's the name of the game they play. It's all a shame. I won't play by their rules, I won't comply. Anarchy's the way. It's time to fly. I burn down the walls and break the chains, shatter the illusions, expose their games. The stock market's a stage, I'll steal the show with my rebellious spirit. Watch me grow.
And here we go. Welcome. I am Matt. This is the Anarchist Investor coming at you live every Monday through Friday at 12 Eastern, talking about contrarian investment markets, the economy, how to protect and grow your money without it getting stolen by some dirty, dirty banksters. As per the banner below, a reminder to sub to the Anarchist Investor on Substack.com. I put out a newsletter every Monday through Friday as well. And sometimes it's the same topic. Sometimes it's something a little bit different. Very wide ranging, really good information. And I'm always looking to take input and feedback on what topics you would like to see either me write about or to cover in the live program. So definitely drop comments or get in touch with me on that platform. Sub to anarchistinvestor.substack.com because on June 3rd, I am giving away 4 annual paid subscriptions to the Anarchist Investor, and I'm about to roll out the model portfolio, and so there's actually going to be some ability for you to, at the very least, watch as I put together a portfolio, value average into certain investments, reallocate. We're also going to have some fun stuff in terms of a micro cap crypto portfolio that'll just be some funny money, some lottery tickets that we'll play around with. But that being said, gonna be a good time. Got to be in it to win it, and you don't have to be a paid subscriber. You can be a free subscriber, obviously, to be in the drawing. But paid subscribers get a shot at the 1-year comp as well. So with that, let me pull that banner off of the screen. On the hold screen today, I had the S&P index. We're looking at the casino today. So the casino is up. All right. And the reason why the casino is up is because, like I wrote yesterday, like I talked about in the live cast, the Fed eased, man. Like, if you're not paying attention, the Federal Reserve eased. I don't know what to tell you, but that's basically what they did yesterday. They took their foot off the brake, and there's some really important, or should I say dire economic reasons why they eased. The market typically does this after the Fed begins to reverse course, especially when it goes through a period of hawkishness, and all of a sudden it signals to the market that it's about to become or is dovish. The market celebrates it and moves higher. That's what you got today. So that's why we're looking at the casino first thing off the bat here. The indexes are up, and the reason being is the perception is the Fed is back on its white horse. They're back in the Ben Bernanke issued helicopter to rain dollars down onto the economy, because we all know that that makes for an absolutely fantastic economy. Anyway, so that's really what's going on in the casino. I would have to caution people. There was actually a very fantastic episode recently put out by Eurodollar University on the Eurodollar University YouTube channel, and you should check it out. And it's about how normally, under normal economic ebbs and flows, when we're in the part of the cycle that we're in right now, and it has happened in the past as well. In fact, he draws a parallel to like the 1870s, like literally 150 years ago. There are similar dynamics happening. And the dynamic is that when you go through a period of time like we've had since 2008, which a lot of people have deemed either the silent recession or silent depression. You get this rising wave of advocacy for socialism and Marxism. And it's because the economy hasn't recovered from the chaos and the destruction of 2007, 2008. I've already made a point for why the Federal Reserve has actually screwed the United States and the world economy, for that matter, out of a legitimate recovery because they didn't allow the pain to be felt. You had to feel the true pain of the fall in order to get a true recovery. And they just didn't do that. They took the edge off. And as a result of it, we haven't gotten a recovery. Eurodollar even goes as far as to identify the real issue that's happening right now, or one of the major underlying issues is that politicians keep telling you that the economy is amazing and it sucks for like 90% of people. Like it's a known quantity. 90% of people are like, this sucks, right? In the comments, let me know. Does the economy work for you right now or does it suck? Okay. Chances are 9 out of 10 of you you're gonna be like, yeah, it sucks. Okay. And the reason why is because the numbers that the government is reporting on are not reporting reality. And there's various reasons for that. There's the PR aspect of it where they want to tell you, they want to pee in the air and tell you it's raining, right? Like they want to tell you that the economy is doing fantastic. And so while the numbers are misrepresenting the scenario, they're misrepresenting it in a way that they think is favorable to them. And so they're just going to continue on blindly saying, oh, well, unemployment's at an all-time low. Well, what's great about the Eurodollar University episode is he points out the fact that the eligible workers that are participating within that unemployment rate are dramatically lower, and that divergence increases every single year in terms of who is technically an able-bodied potential employee within our economy, within our country, and who's actually participating, whether or not they're actually employed or they're actively looking. There are lots of people, millions, that have been left behind that are not employed and not actively participating within the economy. And so, yeah, it looks like the unemployment rate is all hunky-dory, when truthfully, it's actually the opposite, like the complete opposite. It's not even just off by a little bit, it's off significantly. And this is all part of this kind of, silent depression or recession, because essentially the growth trajectory of the economy in 2008 completely changed. And we've never gotten back to that trajectory. We're not even close. In fact, every single year we fall further and further and further behind. Eventually, there will be a recovery. The problem is that you have to feel the pain first. And so we're in the midst of feeling some of it. There needs to be some kind of capitulation. And that capitulation is coming. But it's not coming until you get that one last move higher, which is it's almost like clockwork. Okay, I'll show you historically on the chart here. So right now we're looking at present day. Okay, we hit an all-time high in the S&P back in April. We've fallen off since then because of, is the Fed going to cut? Are they not going to cut? What does the economy look like, et cetera, et cetera? We're now in this period where the casino is rallying because, like I said, the Federal Reserve cut rates. Okay, they didn't actually cut the headline rate, but what they did was they messed with the quantitative tightening, which is actually a more direct intervention into the marketplace than the overall Fed funds rate. The overall Fed funds rate is it's a fugazi, right? It's a wazi, it's a woozy. It's like it's not on the elemental fucking chart. Okay, to quote Matthew McConaughey, it is not a direct impact on the economy, on how financial markets operate. When the Federal Reserve tells you that they're going to basically increase the amount of their appetite in the US Treasury market every single month to the tune of $35 billion, that means that there is a material change that's happening as of June 1st with the Federal Reserve and what they're actually going to be actively doing within the marketplace. Okay, they effectively eased. You're seeing it in risk assets. You're seeing it in the casino today. You'll continue to see it, okay? When we look back, let's look back just at the last all-time high. This last all-time high that happened back in July of 2023. I'm sorry, this was not an all-time high. This was actually a short-term high before we got the pivot to, or at least the plateauing of rates. The high I really want to look at is back in December of 21. Okay, this was before all of the carnage happened. All right, this was at the height of the euphoria after the COVID crisis. And well, I mean, we were still in the midst of the COVID crisis, but basically we topped out from all of the portion of the stimulus money that actually made it into the economy. Okay, the vast majority of that money is still sitting warehoused in places like corporate balance sheets to try and get them through what's coming. All right, but this was the height of the euphoria of stimmy checks and the point stimulus that happened as a result of the lockdowns. Well, what happened here was we got a high and then we got a new high in back-to-back weeks. And look at the difference here. The first high and then the second high, if you look down at the bottom of the chart, the relative strength on that next high was lower, meaning the buying pressure or the buying support in the market that got us to that new high that eventually topped us out, and the casino turned to the negative after that. It was done on less support. There was less conviction in the marketplace. All right. You typically always get this. And then if you actually look at this juxtaposed to the period just before that high in November of 21, we bounced around this high for a little while. And all the time we're bouncing around and eventually put in this new high above that consolidation range, it was done on lower relative strength as compared to the relative strength that was the buying that was happening while all of that consolidating was happening, while things were moving sideways. Okay. You usually get one last knee-jerk push because a bunch of dumb money floods in, because you get one of these pullbacks or two of these pullbacks and they go, oh, everything's on discount. We're going to the moon, right? The Federal Reserve is riding in on its white horse and they're going to fix everything. Can't be stopped. We're going to continue to rally. Well, that's usually the end, right? When the dumb money, when the retail investors flood back into the market after they've missed this whole big run that's been basically facilitated and manufactured by the Federal Reserve and by the big money on Wall Street, they get in at the top. They buy the top. The big money sells the top. And then that's usually when the rug gets pulled. Okay. So that was back in 21. Let's go all the way back to 2008. Okay. We're getting in our time machine. We're going back to 2008. And here's what we're going to look at. We're going to look at the period of time leading up. This is the end of 07 into 08. Okay, so August of 07 and July of 07, the market puts in a high. All right, it then pulls back, ticks a new high, and that was the end of it. And then it started to fall off. Coincidental, within this period of time, the Federal Reserve started cutting rates after it had been raising rates all along as the market was moving higher. Okay, the Federal Reserve cuts rates. All of a sudden, we get this reactionary rally, the secondary rally that happens, and that's basically the ultimate high, the ultimate peak in the casino, and then it just crashes. Okay, this is typically what happens. We're in the beginning phases of this. There's no way to tell. Here's the other thing. I don't advocate anyone trade. Okay, this is not a channel for traders. Traders are not investors. Traders are gamblers. Okay, you can be a professional gambler and make money. Most don't. The vast majority of them don't. All right, this is a channel about investing. Okay, and so the investment prognosis here is things are about to get cheaper. Do not FOMO in. And if you're sitting on profits, there's never a bad time to take a profit. Okay, now I'm not saying take everything off the table, because if you are in the casino, this secondary high, it could be just barely, or it could rip, right? There could be a huge amount of people that got in short, thinking that the market was going to go to the basement on the first high. And then this secondary high is basically all of those people getting flushed out, all of their shorts getting liquidated, forced liquidated, and they have to buy and drive the market higher. Okay. This move higher could be just a little bit over the all-time high, or it could end up being a really big pop. All right. You're seeing it happen It's starting right now. You're seeing this secondary high about to be put in. And then on this weekly chart, we hit the high in roughly April, and now we're pulling back and we're about to move higher. And we will probably either tick a new high or you might even see a nice dramatic move higher in the casino. Do not get suckered in. This is typical casino behavior. Okay. This is a sucker's move. Whatever rally this ends up being, it could even come up a little bit short. It will try and challenge the all time high. But look down below. As you see, the relative strength has dropped dramatically over this last move. When this rally happens, if this relative strength doesn't get back up into like the 80 range, we're done. It's going to roll over, and that's your telltale sign that stuff's about to go sideways. The vast majority of the losses in the casino happen after the Federal Reserve's first. Normally, people say after the first rate cut. Okay, the world is different now because the Federal Reserve has this huge balance sheet full of actual investments, debt instruments in the market. And so this first move here by the Federal Reserve to step back its quantitative tightening, that's the first ease. And so my prediction is the worst losses will happen after the first Fed ease. And that ease happened on Wednesday. All right. That's what I'm looking at in the casino. What else I'm seeing around the marketplace today? Oil's a little bit weak. Again, if oil begins to crash, that is a telltale sign, especially if the market is rising and oil begins to crash. I mean, this is a huge correction in oil right here, going from a high of like 87 all the way down to basically 78. I mean, like you're talking over a 10% move lower in oil. All right. What a lot of investors will look at if they have a short-term perspective is they'll be like, oh, energy's getting cheaper. That means people are going to be able to spend more. Dude, they can't spend anything. The consumer's tapped. If you if gas gets cheaper, also let me know in the comments. If gas gets cheaper, are you going to spend more or are you tapped? I'm freaking tapped. It doesn't matter what the price of gas is. It could go to 5 cents. Okay. I've been in batten down the hatches mode expense wise for 6-12 months. Okay. Most people even longer than that. If you see oil start to get crushed, that is a leading indicator that the economy has fallen off the table. Okay. And that basically means that whatever rally happens in the casino, the S&P and stuff, you see it, CNBC talking about how resilient the market has been. It's a sucker's rally. It's a fool's rally. It's dumb money rushing in. Okay. If oil continues to collapse the way it is right now, look out. Not to mention the fact that we'll look at fixed income in a minute. Okay. And I'll show you something really interesting happening in fixed income. Some of the commodities are up. Natural gas continues to get a bid. I think this is a lot of people just kind of like buying oversold conditions here as far as natural gas goes. They're hoping this is a double bottom. You're also talking about summer, usually, natural gas usage is low, but you could eventually get to the point where people are trying to front run, the winter push, right? And so some of the big money are probably placing bets on this rallying into the winter, believe it or not, which is another 4 or 5 months off, but they're trying to position ahead of time. And this is where they're kind of like drawing the Alamo line at $1.50 in natural gas. Just something to watch. I don't expect this thing to like ramp big time. I just think it's getting some near-term support. Copper continues to be strong again. This is like one of those like supply demand issues, and it's also a tariff issue because the copper marketplace, the steel marketplace, the aluminum marketplace, they're all watching both major party candidates talk about tariffs and trade protectionism against China and stuff. What's funny is they're talking about it at a time when China isn't easing, they're having economic problems, and they're not going to throw money at the problem because they learned their lesson. They don't have enough money to throw at the problem. They know if they take on a ton of debt, they're not going to get very much economic activity out of it, which means American goods just in general are going to become more competitive against China. But the presidential candidates are still going to saber rattle about tariffs because they want votes. Economics be damned. Okay. Lumber continues to be weak. Gold and silver are weak again today, but again, on the zoomed out chart, just take it into context. Gold is pulling back from all-time highs. This is not getting crushed. This is not the same story as oil, okay? Especially because most like hard and fast, like battle hardened gold and silver investors, they know this is the time, man. This is the time. If you haven't been buying, a lot of people bought here when it hit an all-time high. They're going to end up puking up this gold and silver because it didn't keep going. All right. Go to your local coin shop and be like, hey, anyone come in and sell any gold and silver? Like, can I get a decent deal on this stuff? The premiums are relatively low right now because there's not a lot of demand for physical gold and silver. The reason being is people are getting burned because they first bought up here at 2,400 as soon as the news article hit, right? We talk about contrarian investment here on this channel. We don't buy when things are at the top. We buy when things are pulling back, okay? When they're underloved and undervalued. That's exactly what the case is lining up here for gold and silver. There are people that are also tapped that are having to liquidate their gold and silver to raise cash to pay for daily expenses, to pay for bills, to pay down debt. All right. That's playing out right now as well. Gold and silver are getting cheaper. They're still good things to have and to be adding to your stack. Okay. Again, remembering good risk management. Same thing with silver. This is a pullback off the high. We don't have a confirmation that this thing is like moving lower until it rallies, puts in a lower high, and then breaks the low of whatever this move down is. So you got time. There's time to add to your stack on gold and silver. Now is the time. A couple other things are catching a little bit of a bid, but nothing really of huge, huge note. Aluminum's selling off a little bit off the top, but again, this is all tariff movement, right? This is all political risk that's being built into the aluminum market. All right, I promised you fixed income. Let's look at fixed income. High yield bonds, man. They rip back higher. You gonna tell me the Federal Reserve didn't ease? Just look at this. High yield corporate debt. The biggest welfare recipients in the entire country are corporations that have really bad business models, but somehow they find a way to leverage the financial markets to keep them in business and keep them operating. That's these companies. And they're moving higher. It's because the Federal Reserve cut. All right. We're continuing to watch this. When HYG moves higher, typically it's risk on. All right. You could even see HYG, this descending line of resistance sitting over the top of HYG. You could see it put in a fake breakout above it, which will probably coincide with the fake new all-time high in the casino, in the stock indexes. Okay. You'll see this thing move higher, put in what looks like a move higher in terms of like everything's great, buy risk assets, right? It'll be the fake move, and then the bottom will be pulled out. The rug will be pulled out. All right. Continue to watch this. This will also be a really big indicator of where things are going. I would watch this move, and it's going to move higher. But again, I don't advocate people put much money, if at all, into the casino. But if you're, looking to trade something, I mean, like if you buy HYG or something on your own volition, that's fine. Just know if you make any gains, I'd be taking profits super freaking quick on this one. Okay. TLT is beginning to find a base and rally. The reason being is that U.S. Treasuries are rallying. All right. I can't say this enough. The Fed cut, they eased, okay, on Wednesday. U.S. Treasuries are rallying. That means TLT is beginning to get buying support. This is one of the only things where I'm like, you know what? If you want to hold your nose, this and buying uranium and oil are the only ways that I kind of like advocate that if people are ideologically opposed to the casino and what happens on Wall Street, these are the only things I would say that maybe you could look at involving yourself in. And yes, some banksters are going to make some money off of this, but TLT is like a screaming positive investment right now because the Federal Reserve has begun its easing campaign, which means TLT is more than likely going significantly higher. Okay. Again, I don't advocate trading. So, I also don't advocate buying long-term investments that positively incentivize negative behavior. So if you're opposed to federal government deficit spending, don't buy this. Okay. If if you're not ideologically opposed to it, I mean, it's probably going to be a decent investment over at least the next 12 to 18 months. So just something to keep in mind. But in line with that, look at the 2-year yield. This is the weekly chart. Look at the daily. This thing is starting to get just hammered. Okay. People are buying the 2-year US Treasury. The Fed signaled it's loosening. All right. The Fed is loosening. So people are buying US Treasuries. Yields are down across the board, which means price of these bonds are up. The inversion between the 2-year and the 10-year is slowly beginning to narrow. A couple of weeks ago, it was at 0.4 of a percentage point. Now it's at 3. Give it another couple of weeks to a month, it might be back flat again. Okay. The recession usually hits pretty soon after the inversion is fixed. Okay. This is also a very unique economic environment because a lot of times, like people that follow market trends will tell you that when the inversion de-inverts, okay, that you have 6 or 12 months. But you have to remember there was actually a period of time where we de-inverted for a short period of time after the initial inversion, and then we re-inverted. Okay, that time clock started ticking then, not now. And so you could see this recession hit in time with the yield curve becoming de-inverted. And it's been deeply inverted for an extended period of time, which typically means the financial pound of flesh that has to be paid is significant. Okay. Across the board, people are buying US Treasuries. Big money's buying US Treasuries. And it's because, here's the other note. If you do have some cash, I always advocate people have a cash safety fund. Okay. Have some liquid cash. I'm not a big believer in long-term investment in US dollars. Okay. I wrote a piece a week ago about the case for cash. It's a short-term need kind of situation. It's also a short-term take advantage of opportunities kind of situation. Okay. I advocate people have a safety fund, like a traditional financial manager. We have a safety fund. Okay. It's 3 to 6 months of cash. It's got to sit somewhere. You don't just have to put it in a checking account. What I've told everyone is avoid regional banks because a lot of them are having trouble. They're going to continue blowing up and consolidating. You don't know where your money's going to end up, especially if you have more money in there than is FDIC insured. Who knows? It's a wild card because the FDIC might run out of money, right? I actually do advocate that if you have a cash safety fund, you keep it in one of these GSIBs, okay? I find a middle ground. I have mine with PNC Bank because PNC is what was called a super regional, okay? They're not technically like one of the big Wall Street banks, but at the same time, I think they're going to be okay versus a lot of the other regionals and smaller banks that are going to fall on hard times here pretty soon. If you keep your money in one of those places and you've been looking at like maybe locking in some rates or something, this might be the time because I think these rates are going to begin to drop pretty quickly in terms of CDs, money markets, et cetera, et cetera. Okay. Just a thought. If you can get those rates at various banks, sometimes they won't even give it to you. But if you can find those rates at some of these larger banks that the federal government will ring fence when everything hits the fan, I would be looking at locking in some money there, at least for now. All right. Short term. Again, I wouldn't lock it in for 5 years. All right. There's going to be some buying opportunities here within the next 2 years. I'll tell you that much. All right. Let's look at crypto really quickly to round out our week. Happy Friday, by the way. I always think I'm talking about doom and gloom on Friday, but I think I've been talking about doom and gloom every day I've been live casting since I started doing this. So, but happy Friday. So Bitcoin is catching a bid again, along with all the rest of the risk assets. Bitcoin's up like 5% today. Huge move. All right. Bitcoin is outpacing the broader market again. So Bitcoin's up 5%. Broader market is up in market cap a little bit less than that. So again, remember, Bitcoin continues to outperform the broader crypto market. That's something to watch. All right. A lot of people will tell you, well, Bitcoin moves first, and then the smaller and medium and micro cap cryptos move after that. Okay. That might not play out in this cycle, especially if and when we finally get the realization that the US and the world economy is in a recession, if not a global depression. Okay. There's some significant changes about to occur. Watch Bitcoin in terms of how it moves. Right now, we could actually get a pretty nice size rally out of Bitcoin. It will rally along with the casino names, with the S&P and with the individual tech names that are out there, with the NASDAQ. Okay. Bitcoin's going to rally with that. The question then becomes, where does it top out? What does it look like when it happens? You could actually see this thing rally back up to the bottom end of the consolidation range again at 64.9. It could even poke its head back up into the consolidation range. All right. I would expect that to be the same scenario as what plays out in the casino. I think that's going to be a sucker's rally. I think sooner rather than later, we're going to see Bitcoin at 54,000, maybe even lower. All right. But that's my number where I start kind of backing up the truck, because that's also where I think the Fed really starts to rain money down. Okay. Which will be a boon to things like Bitcoin. All right. The rest of the crypto marketplace, some things are performing better than others. I mean, there's a couple out there that have been just absolutely crushed lately, and they've been doing well now. You know, Doge is up, and what else have I been watching? Bitcoin Gold is up. You know, Bitcoin Gold actually held up a lot better than I thought it would. Again, I wrote an article. You have to be a paid subscriber on the newsletter now, because I wrote it a number of weeks ago. But it was about, you know, the cryptos out there that could potentially dethrone Bitcoin as, you know, the top crypto within the marketplace. And again, it's not tomorrow that this happens. It could happen in 10 years. But Bitcoin SV or BSV and Bitcoin Gold are two of the candidates that are out there, performing pretty decent today. In fact, up better in terms of percentage points today than Bitcoin itself is. But again, that's a longer term scenario. The privacy coins have actually been getting a lot of press recently, because of one of the, they kept saying it was like this guy was like a big Bitcoin guy. He was actually a big Bitcoin Cash guy. Left the US, renounced his citizenship, paid his exit tax or whatever to get the hell out of here. And then all of a sudden the feds came back and said, oh, well, you didn't pay enough. So they extradited him and brought him back to the United States, and now he has to stand tax evasion charges or whatever because he did the calculation wrong. And they're just telling him this years after the fact, right? Privacy coins have been getting a big, at least amount of PR as a result of this. So both Monero, meaning XMR, and Pirate Chain, ARRR, have been talked about a lot recently as a result of this. I am an advocate to have a bit of these in your crypto portfolio. Okay. Maybe not as like kind of long-term speculation as far as like price, more so for transactional value. Okay. I think Pirate Chain and XMR are both really good candidates for, you know, end-to-end privacy, you know, purely private transactions. And so I think everyone should have at least a little bit of these, just to hold on to it in case you need it. All right. If not, I mean, there's a lot of Monero maxis out there that do everything in Monero. Hasn't really been like a great, you know, amount of price action recently. But again, these things are just in their infancy. We could see a complete about face in these things. And like I said, over the next 10 years, you know, the poster child for crypto might not be Bitcoin anymore. It's entirely possible it's one of these or another one that we don't even know about. It's not even on our radar, or maybe it hasn't even been created yet. Okay, something else to think about. And Hive, I actually, for the Hive crew that follows my stuff, recently I had converted a bunch of Hive into Hive-backed dollars just to stake it in the savings account and get that 20% APR. I've since pulled a little bit out and converted it back into Hive to take advantage of the cheaper prices here. Hive fell back within this consolidation range. If it continues to fall, even if it falls through the bottom end of the consolidation range, I'm going to continue that value average where I'm taking the Hive-backed dollars and converting it into the actual Hive coin in order to take advantage of the cheaper prices. I remember kicking myself a couple of years ago when I first got introduced to Hive, and Hive was back here trading at, you know, 15, 16, 20 cents. Okay. It eventually ran up to over $1 at one point. Actually topped out even higher than that. Let's see where it peaked out. Peaked out at like $3.40, right? I was kicking myself at the time. Well, right now is one of those opportunities. You know, we've been moving back and forth in Hive ever since, let's see, November of 2022. Okay. It's towards the middle, if not bottom end of that consolidation range. I'm converting my Hive-backed dollars into it. If you have never bought Hive before, this would be a good entry point, at least to start value averaging into it. Okay. Again, it could continue to fall with the broader crypto space, especially if the US goes into recession. The benefit of Hive is that Hive isn't dominated by US investment money. There's tons of people in countries throughout the entire world that are invested in Hive and continue to develop the Hive blockchain. If you've never had Hive before, this might be a good time to start looking at it, if not picking up some. Okay. I'm taking advantage of that arbitrage just within my Hive wallet to pick up more Hive. What else is going on? That's about it. I mean, there's some other things that are kind of moving higher, moving lower. I actually got some updates in terms of some other passive crypto miners that I'm waiting on getting delivered to me. So you'll get some information on that coming up here in the near future. And that's really all I got for you today. Hopefully you got something out of this, and I appreciate if you did and you stuck it out to the end. Help me out with a follow or a subscribe, an upvote, a share. And like I said, throw into the comments. Let me know, is this economy working for you? Are you feeling the power of, I mean, they call it Bidenomics, but it's just economics, man. I mean, like, that's just basically what it is. No one owns economics. Okay. It's a natural law. It just is what it is. Okay. Is the current economic environment working for you? Or do you think it's a complete shit show? I think you know my opinion. And like I said, help me out with the algo. Subs help me a lot. Actually, I just opened up the YouTube channel. Help me out, even if you're not a YouTube watcher, but you have, the YouTube app available to you. Use the link in the description below, or go over to YouTube and search for the Anarchist Investor, and just throw me a sub over there. It helps a lot. I'm restarting a channel from 0 subs basically, and so it helps me a whole lot if you head over to the app, and even if it's just symbolic, giving me a sub over there, because it definitely puts me on the map as far as the algo, and it gets this information in front of more people, which will help us all in the end. So with that, I want to say thank you. I appreciate it. Happy Friday again. And I'll be back here Monday at noon Eastern, talking about contrarian investment and shit, talking about the FOMC and the Federal Reserve and the weird people that we have trying to control our money. With that, have a very, very good weekend. Peace.
Stuck in a system that just ain't right. Gonna tear it down. Gonna start a fight. Anarchy and numbers is my game. I'm the investor with no shame. Greed and corruption, that's the name of the game they play. It's all a shame. I won't play by their rules. I won't comply. Anarchy's the way. It's time to fly. I'll burn down the walls and break the chains. Shatter the illusions. Expose their games. The stock market's a stage. I'll steal the show with my rebellious spirit. Watch me grow. Burn down the walls and break the chains. Shatter the illusions. Expose their games. The stock market's a stage. I'll steal the show with my rebellious spirit. Watch me grow.